This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. So, did you buy the dip? Well, if you're DCAing along with us today, you are about to. And, well, on a positive note, the classic stereotypical Florida weather has returned. As you recall, last week it was downright chilly. I was wearing a jacket in the studio because the studio doesn't have a heater. However, that is not the case today. It is a warm, glorious 75 degrees Fahrenheit, which is about 24 degrees Celsius, here on the Space Coast of Florida. And before we get into a whole lot, I do want to take a minute to remind you that last week we mentioned that Apple had started switching off automatic downloads if you haven't listened to 5 episodes of a podcast within the last 2 weeks. And obviously that's a pretty high bar for a weekly podcast. So if you're having to search for this podcast, that may be why. If you don't already have automatic downloads enabled or re-enabled as the case may be, it is a really great way to help feed that algorithm monster. And I know I like to listen to podcasts when I'm traveling, and it's really nice to have all my favorite podcasts ready to listen if I'm on an airplane without Wi-Fi, for example. So if you missed out on last week's podcast because you didn't get an automatic download and you had to go searching for it, that's probably why. So if you do us a solid and switch those automatic downloads back on, rate and review the podcast, rate and review the episode. That'll help quite a bit as far as helping our podcast be featured to more and more people, and hopefully helping us orange pill more future plebs. All right, before we get into the news, let's take a real quick look at the vital statistics. Today is Wednesday, January 24th, 2024. And of course, that means it's DCA Wednesday, but perhaps more importantly, at this moment, we are sitting at a block height of 827,192, and Bitcoin is ringing in at a US dollar value of $39,645 per Bitcoin. You know, that may seem like it's down quite a bit, and it is down quite a bit from pushing 50,000 in the pre-ETF approval hype. But really, you only have to go back to the end of November, beginning of December. Our DCA Wednesday episode on November 29th, for example, we were stacking at $37,925. So we're actually doing better than we were just 2 months ago. And speaking of better, one filthy fiat dollar will currently purchase you 2,522 sats. That is almost 200 sats more than last week. So that's really cool. And if your goal is to stack sats, not to necessarily have a specific fiat value in your represented in your hardware wallet, but to accumulate as many sats as you can before hyper Bitcoinization, this little bit of a price break certainly will help with that. The current block puts us just 12,808 blocks away from the next minor reward halving. TikTok next block, that's still looking like that's going to be on April 20th of this year. So less than 3 months away now from the next miner reward halving. As you know, the reward that miners receive for finding the most recent Bitcoin block, the next Bitcoin block, is cut in half every 210,000 blocks, and will be cut in half approximately every 4 years, but every 210,000 blocks until the miner reward goes to zero and the last of the almost 21 million Bitcoins will be issued. I say almost because there aren't going to quite be 21 million Bitcoin. We just use that 21 million number because people like a nice round number. And for those of you paying attention, the current price of Bitcoin gives it a market capitalization of $777.3 billion. That's down right about $60 billion since last DCA Wednesday. Still far short of that $1 trillion market cap we've yet to retake. And as you know, I've always said that people like magic numbers. They like those big, nice round numbers. And despite the fact we saw the ETF hype and a lot of talk about the ETF and the run up to the ETF, when the whole Bitcoin never died thing really starts sticking in people's minds, will be when it crosses that $1 trillion market cap. So a lot of people don't think market cap is really important. I, however, do think it's important because normies are strange. Normies like round numbers, and $1 trillion, I think, is that magic number that's really going to make it stand out in people's mind, especially the naysayers that still exist in the traditional financial media. When Bitcoin crosses that $1 trillion market cap, they'll sit up and pay attention. And that should happen before, sooner rather than later, right? Obviously, Bitcoin traditionally sets a new all-time high about 6 months to a year after the halving. That halving is coming up fast. It seems like just the other day I was mentioning, Thanksgiving's coming up. After Thanksgiving is Christmas. After Christmas is New Year's. And after that, we got the halving. And well, Thanksgiving came and went. Christmas came and went. New Year's came and went. Before you know it, the halving will have come and gone. And the next face-melting bull run will have kicked off. And that's going to be a lot of fun. If you're new, if you're class of 21 or newer and you got in after the all-time high or right at the all-time high but missed the fun run-up, it's exciting. Don't let your they say that hodling through a bear market is the hardest time to hodl. I personally find that hodling during the bull run is the hardest time to hodl, because if you've been in it more than one cycle, we're just looking at the history. Bitcoin sets a new all-time high, and then traditionally it's had these big 50 to 80% retracements, and then 2 years of a bear market or crab market, and they before the next halving and the next bull run. And knowing that's going to happen, picture this. Picture Bitcoin goes up to $500,000 of Bitcoin right now, more than 10x where we're at. And that's not beyond the realm of possibility. Bitcoin can 10x overnight. It's done crazier things, right? So knowing that Bitcoin's going to drop back to like 100,000, or assuming that that Bitcoin's going to drop back to 100,000, it's really tough. The temptation to sell some to try and buy in when it dips back down and expand your stack it's real. And I think that's harder than hodling when you're down, because when you're down, you can look forward, your eyes are on the prize, so to speak, and you're trying to build that stack because the next all-time high. Eventually there will be no more cycles. Bitcoin will just go up and to the right. We'll have that super cycle that people have predicted every cycle that I've been into Bitcoin. They were predicting a super cycle in 2016 that was going to be the last cycle, and then they predicted that again with the 2020 halving, and they're already starting to hint at it with this halving, because they're talking about the Wall Street and institutional money coming, the nation state money coming, and when that comes, the logic being that the ETFs and the governments aren't just going to dump and panic sell, and they're not going to get liquidated quite like normies do. Although, never underestimate the power of human stupidity. Anyway, the logic being when the big money, the Wall Street money, the professional money comes in, it will be in for the long haul, and therefore we won't have the big sell-offs, the big panic sell-offs. I don't think that. I mean, big money is coming this cycle, but I don't think we'll have shaken the cycle yet, and that this won't be the super cycle if we ever have such a thing as a super cycle. I think supply and demand is, it's a tried and true principle of economics, and as long as there's Bitcoin being issued to miners, and as long as that's getting cut in half, the supply of Bitcoin on exchanges for people to purchase is largely Bitcoin that's mined by commercial miners, that they have to sell Bitcoin to pay for their expenses, to pay for the electricity they're using, to pay their employees, to pay rent, whatever, taxes. And when that gets cut in half, the amount of Bitcoin available to purchase on the exchanges gets cut in half, or roughly in half, and fewer Bitcoin and the same amount of money chasing that Bitcoin obviously would result in higher prices. And I don't see that effect going away anytime soon. And then, of course, people get exuberant. They get overly optimistic. They start saying things like 200K by halving day, or by conference day, 100K by conference day, because it's really easy to let this go to your head when you're looking like a genius to all your friends and family because Bitcoin is 10x or 20x what you paid for it. And I'm just saying, human psychology is a funny thing, and basic fundamental principles of economics are almost like principles of physics. They're not going to change anytime soon. And I'm not talking about Austrian economics and monetary theory, et cetera. I'm talking about barter level principles of economics. Like, you have a chicken and I want it. I'm going to have to give you what you value that chicken for, regardless of what that is, if I really want that chicken. All right, that was a heck of a tangent, right? So we were just talking about Bitcoin's market cap, 777,777. It doesn't get much luckier than that if you're superstitious about numbers. Currently, though, if you value your wealth in shiny yellow rocks, it will cost you 19.5 ounces of gold to purchase just one Bitcoin. Hey, Peter Schiff, Bitcoin is on sale compared to where it was last week and the week before. Still a heck of a lot more expensive than it was just back in October, when less than a pound of gold would have purchased you 1 Bitcoin. And they say, that you get Bitcoin at the price you deserve. And if you've been holding on to that gold and you've been reluctant to get into Bitcoin, you can do so now for 19.5 ounces, at the price of 19.5 ounces of gold for just 1 Bitcoin. For those of you who value your wealth in pizza, 1 Bitcoin will currently purchase you 2,217 large pepperoni pizzas from Papa John's. That is 1 pizza every day for more than 6 years. That works out to about 6 years and 1 month, just shy of 6 years and 1 month worth of pizza for just 1 Bitcoin. That is a heck of a lot of food security to at least be able to eat once a day for 6 years on 1 Bitcoin. And of course, in 6 years from now, will be a completely different halving cycle. God only knows what Bitcoin will be worth at that point in time. So that's another number that's only going to go up and to the right. The number of pizzas, as pizzas trend to 0 in Bitcoin terms. And speaking of Bitcoin and transactions of things you can do with Bitcoin, the mempool is still looking pretty bloated. According to Clark Moody's mempool, there are 128 blocks worth of transactions pending in what Marty Bent likes to call Clark's teeny weeny mempool. That's up from 92 blocks last Wednesday and 103 the Wednesday before. So a significant increase in blocks. However, that is not translated into higher fees. So a lot of that's probably that ordinal inscription BRC20 spam, because last week, Clark Moody's fee estimator was recommending that if you had a high priority transaction that you wanted to guarantee was mined immediately in the next block or two, that it was going to cost you a fee of 164 sats per VByte. That has been cut more than in half. They're now recommending a fee of 68 sats per VByte, and a fee of just 33 sats per VByte should be mined within a day. They're still saying that a fee of 6 sats per VByte will be mined in a week. They've been saying that for months, though, and I have not seen a block with a 6 sat per VByte fee in it that I can recall in that time. So I wouldn't be brave enough to try a 6 sat per VByte fee. Maybe if you really didn't care how long it was going to take to confirm. But looking at mempool.space, they're showing that anything below 21.8 sats per VByte is getting purged from the mempool. So a 6 sat per VByte transaction isn't even going to sit in a lot of mempools. So it would never get confirmed. They are also telling a slightly different story on their fee estimator. Mempool.space is saying that a high priority transaction should have a 27 sat per VByte fee, and that's the cheapest we've seen it in a long time. In fact, I'm scrolling through my notes here. It was 50 sats per VByte last week, so almost double. Before that, it was a little cheaper, but it was still 31. That's the next cheapest I'm seeing in my notes for the last 2 months. So if you do need to consolidate transactions or move some Bitcoin around on chain, now might be the time to do so. That works out to about $1.50 US, which is still a lot more money than the last time I consolidated transactions. The nice thing about using Cash App to do our stack, when I'm getting ahead of myself, is that they don't charge a mining fee when we transfer to a hardware wallet. So I haven't paid a lot of mining fees. The last time I did, it was less than a quarter. So that's still significantly more expensive. And mempool.space is actually saying, regardless of what your transaction priority is, a 27 sat per VByte transaction will get confirmed, because they're recommending medium, low, or no priority transactions include at least 27 sats per VByte as well. But that's still a lot cheaper than their no priority transactions. Last week, we're recommending a 44 sat per VByte transaction. So fees are trending in the right direction. That's good to see. They're still expensive, but they're nowhere near as crazy as they were. And they're certainly nowhere near as crazy as they were in the 2017 bull run, when they were talking $50 US fees for an on-chain transaction. And that was when Bitcoin was only worth like $17,000 or $18,000 per Bitcoin. So the price of Bitcoin's double. So that would effectively be a $50 fee then would be the equivalent of $100 of the Bitcoin now. And that would just be astronomical. So of course, none of this matters if you've got a good Lightning node and you have a decent number of channels and you're transacting on Lightning, or transacting with less than ideally on a custodial Lightning app. But if you are transacting on chain, most wallets will let you do replace by fee. So if you do want to lowball your transaction and it doesn't get mined, hopefully you have the ability to change that. That's something that you need to be familiar with before you start playing with that, because you don't want to end up sending a transaction where you don't know what you're doing, and you end up with a transaction that you needed confirmed right away that doesn't get confirmed. All right, that transaction metric that you know has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate. Man, it's holding true. You know, I've always said that during the history of this podcast, when the transaction rate was up from the previous week, when it was above a certain level, which used to be about 3.14 back before Taproot, that the price of Bitcoin was up. And then when the price was down week over week, the price of Bitcoin was down. And last week, Bitcoin's 24-hour average transaction rate was averaging 4.99 transactions per second. And currently it's averaging 4.31 transactions per second. And true to form, the price is down. So, you know, there's not necessarily any magic to this metric. And I don't know if anybody uses it, if there's any kind of TA, other than the fact that I've just watched this metric every Wednesday for 2.5 years. And it's just seemed to correlate. So they say correlation is not causation, but for now, it's still ringing true that when transactions rates are declining, the price is down. So we'll keep following that metric, even if it is just a coincidence. Speaking of on-chain, speaking of mining, etc., a couple days after the last DCA Wednesday, we had a relatively large difficulty decrease in how hard it is to find the next Bitcoin block. In fact, it was a decrease of 3.9%. And I attributed that to the winter storm that was moving across most of the country. You remember, it was cold here in Florida. It was below freezing in Texas, where a large portion of the hash rate is. And I heard someone report that a full 25% of network hash rate was offline. And then that's what resulted in that big 3.9% difficulty decrease. That's currently not the case. It's nice and toasty warm here in Florida. It's warm across most of the country, or relatively warm anyway, certainly in the southern states like Texas. And as a result, we're looking at a increase next time around, which is going to be 1,384 blocks from now. As you know or may know, the Bitcoin mining difficulty is adjusted every 2,016 blocks, which works out to about every 2 weeks. And that's with the goal of keeping blocks coming in at an average of 10 minutes between blocks. Sometimes they come in one after another. I saw them take over an hour last night. And, you know, that's why they take 2016 blocks, so they can get a nice average before the protocol makes that adjustment. But currently, it's looking like we're going to see an increase in the difficulty to mine the next block somewhere around February 3rd, about 9.5 days from now, of anywhere between 2.24 to 2.8%. We're still quite a ways out, so you know that could get even worse as hash rate comes back online, or the average gets a little more reliable, because we're still over halfway or less than halfway through this mining difficulty epic. But currently, blocks are zooming in on an average time of 9 minutes and 46 seconds. Obviously, that's faster than once every 10 minutes, and that's why we're looking at a 2.25 to 2.8% difficulty increase. Real quick, I want to take a minute to thank those of you listening on your favorite podcasting 2.0 app, such as Fountain. You can earn sats for listening to your favorite podcast on Fountain, as well as support your favorite podcast through the value for value model by streaming sats to your favorite podcasts on a per minute basis, or by boosting that podcast. That's a one-time deal. It's a shout out, but it's a shout out on the Lightning Network. So you send a message with some sats attached. And I'm happy to report that apparently Fountain has fixed their clipping issue, because I've heard multiple podcasts talk about it, and I've gotten reports from our listeners that clipping issue appears to be resolved. And along those lines, we have a shout out from Leggy, a boost from Leggy. Leggy sent 5,000 sats and said, "Thank God Fountain works again!" ! That's good to know. And thank you once again, Leggy. Thank you for the boost. Thank you for listening. And thank you for helping me troubleshoot that, because man, that was really concerning when I got that message from you that the podcast Audible was nigh unlistenable. And I'm glad it wasn't my fault, but it was, obviously it was frustrating trying to figure out exactly what the problem was. And it was a solid week before I heard other podcasters start complaining about it as well. So fortunately, it looks like Fountain has scrapped that clipping software that they were using to take pauses out of podcasts to speed up podcasts, because it really was atrocious. And speaking of our listeners, our geographic distribution of listeners has had a little bit of a change. And by that change, I just mean it kind of went back to where it had been for a long time. Our top 10 countries by listenership are as follows. Number 1 remains the United States, but they've lost a percentage point. It used to be 56% of our listeners were in the United States, and currently that's only 55%. still over half of you. So thank you to those of you in the United States listening. This is an English podcast. I'm in the United States, so it makes sense that most of our listeners are here. Number 2 remains Argentina. Number 3 remains Germany. And here's the shakeup. Luxembourg has retaken the number 4 spot. As you remember, Canada had passed Luxembourg to take the number 4 spot. And now Canada is back to number 5. Luxembourg is number 4. So I'm getting ahead of myself. I forgot to say muchas gracias, amigos in Argentina. And Dankeschön, mein Freunds in Deutschland. And Dankeschön, mein Freunds in Luxembourg, or Morien. And the change is, we have the same number of listeners in Canada, but it looks like we picked up a listener or two in Luxembourg. So, Leggy, if that's you orange pilling people and turning people onto our podcast, thank you once again for that. Or if, I wouldn't say maybe you just switch to listening when you're in Luxembourg, because our percentage in Germany has remained exactly the same. The only thing really that's changed is Luxembourg picked up that 1% that the United States lost. Number 5, of course, is Canada. So thank you to our friends in the frozen white north. Hopefully your weather's a little bit warmer up there this week as well. Number 6 is Spain. So muchas gracias, amigos in Spain. Number 7 is Colombia. So muchas gracias, amigos in Colombia. Number 8 is Sweden. So thank you to those of you listening in Sweden, although I apologize, I don't know how to say hello or thank you in Swedish. Number 9 remains the United Kingdom, where I do know how to say hello and thank you to our friends in the United Kingdom. So thank you to those of you listening in the United Kingdom. Number 10, as always, the last few months remains Venezuela. So muchas gracias, amigos in Venezuela. And I'm lurking down at number 11 still is Mexico. So it'd be interesting to see if we pick up any more plebs in Mexico. It's really cool that we have so many Spanish language speaking countries, so many amongst our geographic distribution of listeners, amongst our listenership, so many Spanish speakers. So maybe Mexico will move up in the rankings. You're just under there at number 11. So if you're listening from Mexico, grab a buddy and have them listen to a podcast or two. Maybe you can break into the top 10 next week. All right. So real quick, let's get into the news. Of course, the news that everyone's talking about is the price. Bitcoin had that sell the news moment, although I think it was less sell the news and more just the outflows from Grayscale Bitcoin Trust. We've seen several $1 billion flow out of GBTC. And even though the ETFs have been some of the most successful ETFs ever to launch, they're having a real hard time keeping up with those outflows from GBTC. That being said, there's only so much GBTC to be sold, and that will come to an end sooner than later. And hey, I've said numerous times that every time the price of Bitcoin drops, think of it as your second chance to reach that stacking goal that you were worried you had missed. Admit it. When Bitcoin was pushing $50,000, a little bit of you said, I'm never going to get to that stacking goal. Even I did. I was saying that we have a 10 million sat stacking goal for the kind of unofficial stacking goal for our DCA Wednesday series, and it was starting to look like that's going to be a lot harder to achieve as we're getting fewer and fewer sats for our US dollars. So every time the price of Bitcoin drops, we're getting an opportunity to stack those extra sats that we thought we weren't ever going to get to stack. Of course, it's also spurred a lot of memes. There's that meme with the guy poking Bitcoin with a stick saying do something, and then the meme I prefer is when it rockets up and shoots through his face. But this one, of course, the meme is dropping off a cliff. Bitcoin's dropping off the cliff, and people are like, no, not that. But also, We Are Satoshi on Twitter tweeted out a meme that shows Winnie the Pooh and Piglet sitting on a log, and Piglet says, "What time is it, Pooh?" And Pooh says, "Why, it's time to BTFD, Piglet." And certainly it is. So hopefully you bought the dip. Just because you're doing DCA doesn't mean if Bitcoin's on sale, you can't pick up a little extra with your dry powder. But fortunately, today's our DCA day, and oftentimes I've lamented that Bitcoin will go on a dip, and then by the time DCA Wednesday rolls around, it's right where it had been the previous 3 months in a row. There was a lot of that going on. So it looks like we're actually going to buy, unless I talk so long that the price of Bitcoin explodes and we miss out. But I'm fairly confident that we're going to get a good deal on Bitcoin today. I do want to remind you that I have said numerous times in this podcast that each of the previous cycles has had significant correction. It's had a significant correction a month or two before the halving. And while each time has been blamed on different causes, for example, last cycle, right before the halving, we had the thing that caused the economy of the world to come to a screeching halt. But either way, we've had some sort of black swan or some sort of event a month or two before every halving where the prices dipped. And if you look at the chart of the different cycles and where we're at in the cycles, overlapping each other, this correlation certainly rhymes. I've also said multiple times that in addition to the fact that we have a major pullback right before the halving, or we have had major pullbacks right before the halving every single cycle, that a normal, whatever that means, a normal cycle, we're usually about 3 times the cycle low on halving days. So our cycle low was around $15,000 range, depending where you're getting your data. So 3 times 15 would be $45,000. So if we had crossed the halving greater than $50,000, that would have been the outlier. So Bitcoin's going to do what Bitcoin's going to do. But so far, this cycle is rhyming remarkably well, other than the fact we had that double top. But even the first cycle had a bit of a double top. So, they'd say history doesn't repeat, but it rhymes. And I think we're definitely rhyming. Nonetheless, Hodlonaut gave us a little bit of perspective on the current price range yesterday when he tweeted out, "The fact we are at 38K and the sentiment is bearish is a testament to the human race's capacity for high tie preference, and herd mentality." And that's certainly right, because as I pointed out when we were going over the stats, literally we're exactly where we were just a month and a half ago. And before that, remember Bitcoin was stuck in the $20,000, $25,000 range for several months. We talked about the crab market. All of a sudden, we're more than $10,000 higher, and people are perceiving that as if Bitcoin's dipped, that if Bitcoin crashed, that Bitcoin's low. And in all reality, we're more than double the cycle low. VJ Boyapati tweeted a thread yesterday assigning blame for the current Bitcoin price trap squarely on the shoulders of Digital Currency Group and GBTC's Barry Silbert. He tweeted, "The reason for Bitcoin's recent drop in price, despite the ETF floodgates being opened, is directly related to GBTC redemptions by bankruptcy estates such as FTX. And the reason GBTC is held by so many companies in bankruptcy is directly tied to the fraud by Barry Silbert." And he's right. In fact, it's been reported that FTX alone dumped $1 billion worth of GBTC as part of their bankruptcy restructuring efforts. And remember, they're not alone. BlockFi, Genesis, etc. all ended up in bankruptcy, in large part to making bets on their GBTC arbitrage play. And they all have or had plenty of GBTC to liquidate. And of course, you didn't used to be able to cash out. There was no redemption method when GBTC was just a trust. And now that it's an ETF, you can. And when they sell that and cash out in cash, then the ETF has to sell that Bitcoin. Obviously, if they're in bankruptcy and they're trying to get their customers, the FTX victims, money back to them, they're not going to be rolling it into some other ETF. Now that the GBTC Bitcoin is quote unquote unlocked, so to speak, they're dumping it for US dollars in accordance with bankruptcy rules. But eventually that's going to stop. It's already got to be, slowing. I think GBTC had a ton of Bitcoin locked up in it, but not all of it was owned by people that want out, or that people that want out into US dollars. There are plenty of people that want out of GBTC, obviously, because just the fact that it has the highest fees out of any of the ETFs. But if they liquidate their GBTC and then buy, the Black shares, the BlackRock iShares, or the Bitwise or the Fidelity ETF, then that's a one for one, one in, one out kind of situation. So it wouldn't really have a negative effect on the price, because for every Bitcoin sold, there'd be one that was purchased. And that's kind of the rules anyway, right? Moving on to more general economic news, inflation and its knock-on effects remain in the news, and the major concern when normies are polled on what is the most important thing affecting their lives. Ironically, though, if you do a search for the news about these polls, you'll find an almost total blackout with the most recent stories about this, about polls and how they relate as an election issue, were all written prior to Thanksgiving. That being said, Bitcoiners and normies alike continue to feel the pinch from a rapidly devaluing currency. One such effect is that despite modest wage growth, the IRS has not taken inflation into account for tax brackets. So if you earn more, you will not only pay more in taxes, despite potentially losing purchasing power, you may even find yourself in a higher tax bracket, compounding how much more you'll be taxed. So I always thought capital gains and taxes related to inflation were particularly infuriating, not just because inflation is a particularly insidious form of theft, but because if the cost of a good doubles, everything is more expensive. The same thing kind of usually happens with your stock. So if you own X company stock, not X Twitter, but like XYZ, and the price doubles, but only because everything got more expensive, you basically have the same asset. You've got, one apple worth one orange kind of thing. But the IRS is going to say, no, you doubled your money. That's a capital gain, and you owe us 30% of that in taxes, which is insidious because, if you had enough stock to purchase a car, you still have enough stock to purchase a car, but they think you've doubled your money, and that's assholic, pardon my French. Anyway, to add insult to injury, it's usually reported whenever there's a story about inflation or taxes or both that they usually hit the elderly and people on limited fixed incomes the hardest. And Fox Business is reporting today that Social Security recipients could get hit with a surprise tax bill this year. As I kind of already mentioned, the article goes on to say, although Social Security recipients receive a cost of living adjustment that is indexed to inflation, the amount of benefits exempted from taxes has remained unchanged for decades. Since 1984, retirees have owed taxes on their benefits if their adjusted gross income including up to 85% of their Social Security payments is more than $25,000 if they're single or $32,000 if they're a married couple. So isn't that nice? The money that you worked and that they took out of your paycheck and held against your will for your entire life, when you finally get it back from the government, you owe income tax on it. Surprise, suckers. The article goes on, and that's my words. That's not Fox Business. The article, however, continues. Now, experts say the ongoing inflation crisis could ultimately push more seniors into higher tax brackets as a result of last year's 8.7% COLA increase, the biggest since 1981. It increased the average monthly benefit by about $140. So you know your grocery bill went up by more than $140 a month. You know the real inflation number is definitely greater than 8.7%. But even if it was exactly one for one at 8.7% and the seniors were doing exactly the same, if inflation didn't count, they were unfazed because their COLA cost of living increase made up for it, they're going to get screwed on taxes. So, surprise, suckers. You didn't think the government was just going to give you your money back with those strings attached, did you? Obviously not. You can always count on the government to do the wrong thing. Cedric Youngelman put inflation into perspective yesterday, tweeting a graph that illustrates lost purchasing power in relation to the minimum wage, tweeting #Bitcoin facts. And the tweet graph, the text on the graph says, the biggest indicator of U.S. decline. You could buy 6 Big Macs with 1 hour of minimum wage in 1980. But today, you can't even buy one, despite minimum wage more than doubling. And it shows in 1980, minimum wage was $3.10 an hour, and a Big Mac cost 50 cents. In 2022, the last year they have their data for it, said the minimum wage was $7.25, and a Big Mac is now $8. That gets you approximately 0.91 Big Macs per hour as opposed to 6.2 Big Macs per hour in 1980. This isn't a, why in my day, I remember Sonny kind of thing, but it wasn't that long ago when I remember that, Subway used to run those commercials. What was it? I'm a working man and I want my share. I want a cold cut combo from where or whatever. And it was, the whole deal was you could get a cold cut combo, a 6-inch sandwich for $1.69. And in fact, that was the jingle. I got $1.69. So what will I get? I don't want nothing that'll put me in debt. I'm a working man and I want my share. I want a cold cut combo from where. I don't know why that jingle stuck in my head, but then remember they $5 foot long. Well, good luck getting a freaking sandwich at Subway for $5 anymore. And that's all because we printed a shit ton of money, and it's not. This is the victory that these politicians have over the normies. Is the average normie thinks everything's getting more expensive. Nothing is getting more expensive. One Big Mac is still worth one Whopper. One Subway sandwich is still worth one Jimmy John's sandwich. What it's not worth is the same amount of dollars because the dollars are worth less. You're trying to trade something that's worth less for the same good. You have to trade more of it. And it isn't that the sandwich got more expensive. It's that they are screwing you over by printing more money and stealing from your savings, stealing your time, stealing your hard-earned time, those hours of your life that you converted into those dollars. So if it seems like your money used to go a lot further in 1980, if you're old enough to remember that, then you were right. I remember one of my first minimum wage jobs. Minimum wage was $4.25, and I only needed $1.50 to go to lunch. So that wasn't that long ago. I mean, it was for some of you, but we're talking, a couple decades ago. We're not talking ancient history. We're not talking 1901 when, you could buy a suit for $5. I mean, an Armani suit for $5 or a house for, $1,000. We're talking about just a couple decades ago. We're talking only like 4 presidents ago. Speaking of economics, the establishment's favorite economist continues to roll out overwhelming evidence that he is either a Goebbels level propagandist or he doesn't have the slightest freaking clue, despite his highly touted credentials. Jameson Lopp tweeting out yesterday, breaking Nobel winning economist figures out that consumers care about prices. Retweeting Paul Krugman's tweet, some thoughts about inflation and vibes. Over the past year or so, it has become more or less conventional wisdom that people care about prices, not rate of change. So, for example, they care that groceries cost more, not that price increases have slowed. Well, no shit, Sherlock. I don't care that my grocery bill is going up by 2% this month over last month. I mean, yeah, it sucks when it went up by 10% or 20%. But the fact of the matter is, despite the fact the White House came out and said that things are getting cheaper, that's not how it works. The groceries are not getting cheaper. They're just getting they're getting more expensive slightly slower. And so your dollar is still not going as far. You still have to put that steak back and get ground beef, or put that ground beef back and get, ground chuck or ramen noodles. And the fact that you're getting the fact that you're getting poorer or slightly slower, of course, is upsetting, even to I have no idea why. I mean, he's got to know better, right? He's not that big of a moron. I mean, he can't be. Although, if you remember, Paul Krugman is the dimwit that brought us the infamous 1998 quote, by 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines. So, maybe he is that stupid. And you can't hardly blame him because he holds a lot of credentials in a highly flawed science. The fact we even call it a science is cringeworthy. Anyway, the clown show continues, with Jameson Lopp also pointing out today that everyone's favorite reverse indicator, Jim Cramer, has been on a roll this week. Jameson Lopp tweeted out just a couple hours ago, Jim only mentioned Bitcoin twice in 2023. He's posted about it 9 times this month. Keep him coming at Jim Cramer. And if we scroll backwards to the first quote from January 18th, he said, nasty beginning to the Bitcoin sell-off. Someone's probably going to try to make a stand here. But as we said last night, you can't have an asset double in value by hundreds of billions of dollars in anticipation of an ETF, then almost no one shows up. That's flawed for multiple reasons, not the least of which is the no one shows up part, because, we're on track to see $2 billion in inflows during the first 2 weeks. In fact, the inflows into the ETFs this week are basically on par with one of the most successful ETFs of all time, Vanguard's VOO, their stock index ETF, which sees about $1 billion a week. So that's not a weak start by any stretch of the imagination. Of course, we all know that Jim Cramer is kind of famous for always saying the exact opposite of what happens. For example, the next tweet that he said on January 19th was, you knew they would make a stand on Bitcoin here. Let them try and hold it up for a couple of days. Then tweeting 3 days later, unlikely that Bitcoin finds its footing. So forecasting that Bitcoin's going to keep crashing. Bitcoin equals tough own a few hours after that. Also on the 22nd, now that Bitcoin's down about 20% from its high, I expect a strong stand to be made, but it won't hold because not enough money is coming in. New theme, number go down. Obviously, Bitcoin has gone up since he made that post, so that's par for the course for Jim Cramer. Finally, the last tweet was today, Bitcoin, so strong early this morning, seems a tad heavy here. And of course, I'm looking at the price right now, and it's gone up about $200 just while I've been talking. So keep them coming, as Jameson Lopp says. Keep them coming, Jim, because we all know that the exact opposite of what you say is what happens. So by all means, poo-poo on Bitcoin, because that's the only way it's going to go to the moon. I mean, if he says Bitcoin's going to moon, then you need to start worrying, plebs. This is really cool. Bitcoin brings proof of reserves to the ETF space. Bitwise tweeting out just a couple hours ago, announcement. Today, the Bitwise Bitcoin ETF becomes the first U.S. Bitcoin ETF to publish the Bitcoin addresses of its holdings. Now anyone can verify BitB's holdings and flows directly on the blockchain. On-chain transparency is core to Bitcoin's ethos. The tweet continues, but they list their Bitcoin address, and it shows that they've got 11,858.63 Bitcoin with a market value of $465,314,254.64. So that's really cool. Proof of reserves, so to speak, on the Bitcoin ETFs. And that's a sign of you don't change Bitcoin. Bitcoin changes you. And Bitcoin's changing Wall Street slowly but surely. Speaking of less than positive economic news, Yahoo Finance ran the following headline Friday: why regional banks aren't out of the woods yet. Sizable drops in Q4 profit are a reminder of how challenging 2023 was, and 2024 still holds problems. Remember, the only reason we didn't have more regional banks fail is because they're all technically insolvent, but they introduced the Bank Term Funding Program, the BTFP or whatever, and that's supposed to end in another month and a half, 2 months, right before the halving. So we'll see what happens, because those banks are on shaky ground. I believe it was iTruist that reported they lost $9 billion in the last quarter. Absolutely astounding number. And that is still, that's with being able to report their bonds that are underwater at not mark to market at what their redemption value will be 20 or 30 years in the future, which is, witchcraft. It's cooking the books. It's smoke and mirrors. Speaking of bankers, I heard Jamie Dimon referred to multiple times this week as Epstein's banker. And I think that's fantastic because, he's been on this anti-Bitcoin spree. He was at Davos saying that once again, that Bitcoin's only used by sex traffickers, money launderers, tax evaders, etc. All things that his bank, JP Morgan Chase, has had to pay fines for, including being Epstein's banker, handling all the finances for Epstein Island. So that's an example of what they say, the pot calling the kettle black. And I think this whole reminding people that he's Epstein's banker is genius, because for the longest time, the leftists, the authoritarians on the leftist spectrum in Saul Alinsky's Rules for Radicals, which is kind of been the playbook for the modern Democratic Party. In fact, Barack Obama taught a course on Rules for Radicals, on Saul Alinsky's book, Rules for Radicals, and Hillary Clinton wrote her college thesis on Saul Alinsky's Rules for Radicals. So it's by no means an inconsequential book. And one of the things Saul Alinsky says in that book is that if you pick your enemy, you need to frame it. You need to hang it. You need to frame it. You need to hang a nickname on it. You need to paint the picture of something bad by hanging a moniker on it. Like, it's escaping me here, but like Florida's law that says that you can't teach sexuality to kindergarten students. The LGBTQ community has labeled that the Don't Say Gay bill, and it doesn't actually say anything about sexuality at all. It doesn't say anything about heterosexuality or homosexuality. It just says you can't teach kindergartners, you can't teach really young kids how to have sex, regardless of who you're having sex with. But they frame it as Don't Say Gay because that makes it sound worse than it is. It makes it sound like it's an anti-gay bill. And they've tried to hang this chain around Bitcoin's neck with the Boil the Oceans thing and the Scala Satoshi thing. They've tried to frame Bitcoin to prejudice people. When you think of Bitcoin, you think of it in terms of the narrative that they set. And so this is flipping that on its head. They're framing Jamie Dimon as Epstein's banker, and it's double whammy because it's absolutely true. So I chuckle every time I hear that, because it's neat to see the tables turn, and the people keep trying to frame Bitcoin in a negative light, and the Bitcoiners turn around and flip that on its head. And the only thing that's stuck is when we frame them in a negative light with something like Epstein's banker. It's even more so because it's true. So on a positive note, I took a road trip up to Jacksonville, Florida, in North Florida, South Georgia, basically. It's just on the Florida-Georgia border. And it was cold up there. It was definitely jacket weather up there. I mean, it was cool in Cocoa Beach, but it was 34, so almost 0 Celsius in Jacksonville. Anyway, I went up there to see the Jacksonville Naval Museum, which is where the destroyer USS Orlick is. And it's a destroyer that was built in 1945. It was built for World War II, but it got built too late. It didn't see action in World War II, but it was in service till like 1984. So it was in service for a really long time. It's a pretty historic destroyer. Not as big as a battleship, but still a pretty big boat with pretty big guns. That's not the point. The point is, at the very end, like everything else, you go through the gift shop, and we're looking at the T-shirts and souvenirs in the gift shop, and underneath the T-shirts, on the shelf, kind of semi-obscure by the T-shirts, I see a copy of the Bitcoin Standard. And I said, hey, that's cool. Who's reading the Bitcoin Standard? And the old Vietnam veteran who was the docent there that was manning the gift shop raised his head and said, I am. My brother's a stockbroker, and he gave it to me, and I've been reading it. So, I mean, this guy was probably 80. and he's reading the Bitcoin Standard. He's not just learning about Bitcoin. He doesn't just know about Bitcoin. He's reading the Bitcoin Standard. And props to his stockbroker brother for orange pilling him. And incidentally, a stockbroker that is a Bitcoiner, we talk about Bitcoin changing Wall Street. That's certainly an example of that, because you wouldn't, that's the bankers and the brokers that were, if maybe they wanted to get their grubby mitts on Bitcoin, maybe they wanted to, try and capture Bitcoin or make some of the money off Bitcoin, like with the ETFs, for example. But I guarantee the average person that was touting the ETFs wasn't reading heavy lifting like, the Bitcoin Standard. And that's not necessarily, mastering Bitcoin level technical, but it's a great book. And it was really cool to see an 80-something-year-old war veteran reading the Bitcoin Standard. So that is an example of how we're winning. Also, in some somewhat positive news, Donald Trump, former president, presumptive GOP nominee for the presidential race in this year, the end of this year, has twice now reiterated an anti-CBD stance and that CBDC stance. And that isn't the only part of it. That's probably not even the biggest part of it. He said that the reason he's against anti-central bank digital currencies is because Vivek Ramaswamy advised him, told him about how horrible they were and how they can be used to take away freedom. That is a good sign. If he's going to be if he becomes president again and he's taking his advice from people like Vivek, love Vivek or hate Vivek, of the two people who are running for president, the two people who I think had the best grasp on Bitcoin were Robert F. Kennedy Jr. on the Democrat, now independent side, because the Democrats railroaded him out of being able to run for the nomination, so he's running as an independent. But RFK Jr., obviously, he spoke at Bitcoin 2020 or 2023, gave a heck of a good speech. And then Vivek. So RFK Jr. and Vivek were probably the two most articulate as far as Bitcoin is concerned of the people that were running for president. So if Donald Trump, oftentimes politicians have really big egos, and if you ran against them, that's it. You're out. But if Donald Trump is going to bring Vivek on board on his team, he's a smart guy. Even if you don't trust him, at least he's saying the right things about Bitcoin. So I'm going to be optimistic and say if Trump becomes president again and he has Vivek on his team advising about his Bitcoin policy, that's a pretty good sign. One last note before we get on to our DCA stack. All this focus on price and Wall Street money recently has made it really, really easy to lose track of why we are here. We're here because Bitcoin is freedom money. We're here because Bitcoin is the escape hatch. It's the way to escape the oppression of the state. The Canadian trucker protest was a huge example of that oppression and of that opposition, and how Bitcoin can play a role in that opposition. And it's been long enough now that maybe some of you weren't even Bitcoiners yet when that happened. But Tucker Carlson, Tucker on Twitter, or at Tucker Carlson on Twitter, he has his Tucker on X series now. Apparently, his most recent episode 68, is with Canadian trucker Gord McGill. And Tucker tweeted out, episode 68, whatever happened to the truckers who dared protest Justin Trudeau? Some of them are still in jail years later. Trucker Gord McGill explains how darkness has descended on Canada. So it's important to remember the Canadian truckers. It's important to remember a country like Canada, who everybody thought was like a bastion of liberty and democracy, that, they were the nice, polite people, that nobody ever saw anything like that happening in Canada. And it did. And they were running over old ladies with horses and arresting people for peaceful protests, shutting down bank accounts, canceling their insurance policies, taking away their livelihood, all because they dared park in front of Parliament and in protest, silent protest, holding up signs, having parties, cooking for each other. There were kids in bouncy houses. It was far more peaceful of a protest than the quote unquote mostly peaceful protests we saw in the United States after the George Floyd thing. So I haven't watched that yet, but I'm certainly going to have to watch it. And if you're new to Bitcoin and you don't know the meat and potatoes of what happened with the Canadian trucker protest, you should go back and, you should research at Nobody Caribou, because he was a big part of it. And he's been on a lot of podcasts to talk about the aftermath and the things that happened to him, because they were using, they were raising money for the protesters, and they ultimately ended up using Bitcoin to do so. And they didn't necessarily use best practices. So some of that Bitcoin ended up getting seized, and they got in a little bit of trouble. It ended up, because they were using the same address and it was KYC'd, he ended up getting his door kicked in by the Mounties. So I'm going to watch this episode with Tucker Carlson after I get done with this podcast, and I recommend you do too, because it sounds pretty interesting. And don't forget what happened in Canada, and don't forget the people that stood up to oppression. Don't forget the role that Bitcoin played in helping them do so. All right, so why are we here on a Wednesday? We're here on a Wednesday because every Wednesday is DCA Wednesday. And if you don't know what DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, this is going to be our 131st stack. We started all the way back on July 28th, 2021. So far, we've stacked 130 Wednesdays in a row. We've converted a total of 2,600 fiat dollars, including about $58.50 in fees, into a stack of 8,766,827 sats. We did that just $20 at a time. So that was our equal portion, $20. And I chose $20 because I wanted to choose an amount that showed two things: that anyone listening to this podcast should be able to stack at least $20. I mean, that is a lot of money for some people, not much for others. So this is a do you thing, but most people listening can come up with $20 a week to put away for their future. You know, that might be a lot of money, but it's not necessarily considered a lot for savings. But I wanted to show that even just that $20 can make a difference. And I think we've already done that. As far as the regular interval goes, we chose weekly on Wednesdays. That again is a you do you thing. Most people that do DCA and whatever they're investing in, whether it's Bitcoin or whatever, they usually do so on payday. So if you get paid once a week is fine. If you get paid every other week is fine. The point is consistency, that you invest the same amount of money at the same interval, and you do so without regard to price. And doing so, we started this in between the double tops. So we started, I think, around $35,000, and we stacked all the way up to that all-time high of 69, and then we stacked all the way down to the low. And as a result, that got us our Bitcoin at an average purchase price of $29,657.25, which isn't too shabby. Definitely in the green at this point in time. Today, we're going to grow that stack using the Cash App. As I've already mentioned, I love the Cash App because they will let me stack without, they will let me transfer my Bitcoin to my hardware wallet without charging me a minor fee. That is something that a lot of services will not do. Most services won't do. Their fee is a little more expensive. They charge about 2.25% in fees, but you know, that's going to be 45 cents for this stack. And we would spend more than 45 cents transferring that Bitcoin to our hardware wallet, and they're going to let us do that for free. So I think it all comes out in the wash. Again, this is a you do you thing, but we're going to use Cash App. So I've already got Cash App open. I've already got $20 in there because I was going to buy the dip. In fact, I did buy the dip. I bought at 38 something because I had a limit order put that if Bitcoin got to 38,600 to make a purchase. So woohoo! I snagged some extra sats, but we don't count those for the purposes of our DCA Wednesday series. I'm trying to keep the data pristine so we can show, whether this was a good idea, whether this is a good investment strategy or not. That remains to be determined, but I think we're getting pretty good indicators it has been a smart strategy. As I mentioned, had we YOLO'd in back in July 2021, we would have purchased it a price of, it's $39,716 was our first purchase. So, we would have YOLO'd in and our average purchase price would be underwater. We'd be currently, Bitcoin's currently worth less than what we would have paid. So by DCAing, we knocked that down by $10,000 or so. All right, so I've got $20 on my Cash App already. I'm tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we stacked under 49,065 sats. That makes me happy, plebs, because I thought the days of almost 50,000 sats for our $20 stack were over. Last week, we only got 45,000 sats. The week before that, we only got 41,000 sats. So to stack 49,065 sats makes me really happy. And if Bitcoin gets even lower, I'll be even happier because it was really starting to get worried about making that 10 million Satoshi stack. And, we're not going to stop the podcast just because we reached 10 million, whether we reach it or not. That was just, and when you stack Bitcoin, when you're a pleb and you start DCAing, you tend to change those goals. Like, initially, your goal might be a quarter Bitcoin, then it's a half Bitcoin, then it's 1 Bitcoin. It's a sliding scale. Regardless of how much Bitcoin you have, you always decide you want more, right? So if we hit 10 million, we'll just change that goal. But we're getting closer because today's 49,000 sats brought our total stack up to 8,815,892 sats. So about 1.2 million sats to go to that 10 million sat goal. That is not out of the realm of possibility as long as Bitcoin doesn't go to $1 million in the next 6 months like Samson Mao thinks it will. I guess if it does, I'll be happy that our stack is, grown and that hyper Bitcoinization is occurring. But I'd really like to have a lot more Bitcoin before hyper Bitcoinization occurs. So that's why we're stacking as fast as we can, plebs. So that stack also increased our average cost basis by $61.81. So not as bad as the $73 it increased it last week or the $87 it increased it the week before. But still, it raised our average purchase price up to $29,719.06, I think is what I said. That's still not too shabby, considering that, Bitcoin went up a couple $100 while I've been talking. We purchased it at an effective price of $39,845. So about $200 more than when we started this podcast. And speaking of this podcast, I've been talking for almost an hour already. So before I get too much further into this, I want to again thank those of you for listening. Thank those of you who've been helping support the podcast through Podcasting 2.0, but also as importantly asking that you do us that solid and help feed the algorithm monster by liking and subscribing. Whatever the review process is on the app that you use, if you rate or comment on the podcast, if you make sure those automatic downloads are enabled on Apple Podcasts, for example, that will help boost us when they're deciding which podcast to feature to people that are searching for podcasts and help us, hopefully orange pill more people. You can also help feed the algorithm monster on Twitter by following us on Twitter. At Twitter, we are at BTC Bulletin Pod. But above and beyond supporting the podcast, I like to hear from you. I want to know what you have to say about this podcast. So you don't have to send us a boost. It would be awesome if you did. But send us a DM on Twitter, on X, at BTC Bulletin Pod. Let me know what you think about the podcast. My Nostr NPub is in the show notes if you use Nostr, if you prefer to use Nostr. And if you don't use either and you just want to send us an email, you can send me an email. And the email is bitcoinbulletin@protonmail.com. That's Bitcoin Bulletin, like the show, at protonmail.com. And I'd be really, really interested in your feedback. Of course, if you're listening on Spotify, there's usually a poll or a question in the show notes that you can vote on or comment on as well. Spotify is really big on the user and actor poll thing that the user feedback that they've really been pushing. It's on by default. I don't necessarily select the question. I can go in and modify it, but it is what it is. So I just kind of leave it where it's at. And we have had some feedback. The most recent feedback I have was actually in French, and I think it simply said, "I don't understand." Not me. They don't understand, and I don't speak French, so I had to use Google Translate. And I didn't have any way to reply to them to find out what it was they didn't understand. But by all means, your feedback is important to me. In addition to helping me tailor the podcast to make sure I'm giving you the information that you want, that you find the most useful, it's ingratiating to know where you are and who you are, so that when I'm sitting here in front of my laptop talking into this microphone, I know who I'm talking to. But either way, don't forget to join us next Wednesday and every Wednesday while we grow that stack together, while we try and get to that 10 million sats before Bitcoin goes to the moon. But either way, plebs, keep on stacking those sats, you sexy sat stackers.